And good afternoon, everybody. I am Michael Filigera. I'm with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott Wave update for the S&P 500 for Wednesday, June 2nd, 2021. Again, the market stayed within a range today, but it did produce enough movement that I'm able to put what I think is happening in terms of an Elliott wave count onto the chart, onto the hourly chart. And right now, I am feeling that both the S&P 500 and the NASDAQ are really producing identical moves in terms of a minute fourth wave correction. And having said that, I believe that now what I'm going to present is pretty much exactly what I have presented for the NASDAQ in terms of what could happen next. As you can see, I've left the wave 3 there, the minute wave 3, and there, so we've been remaining in a minute wave 4 correction. And it has turned into a double ABC just as it did in the NASDAQ. At least that's my take right now. And so we have an ABC separated by an additional ABC, X, hold on one second, and an X wave followed by an additional A, B. And so this is the part that we got to just really kind of figure out what is going on. Now in the NASDAQ, it ended, the C wave ended in a failure. And the same thing could happen here, which then would suggest that I'm going to put that C here. Now the other low is at 41.90.75, and this low is at 41.91.50. So not that big of a failure, but a failure nonetheless. So if I do that, then what that suggests is that the market is now finally beginning the next larger sequence in terms of waves in the way of a minute fifth wave up. And that minute fifth wave would also be part of a minor fifth wave, which is also going to be part of an intermediate level fifth wave. And up at the top, it's finishing a primary level third wave. So this is a pretty significant rally phase to the top that it's going to be reaching. And as we get closer, then I'll be going into more detail onto that, the size of and scope of the expected correction. Right now, though, let's just get to those higher levels. The preferred count that I'm using is that this indeed did end in a failure, and I'm going to put the C here, put the 4 there, and that we're beginning a 1, 2, 3. Now, the alternate would suggest that it's going to be a little bit larger or very much larger because the size of the first wave down, a much larger C wave. If that's the case, let's just take a peek as to what we could be staring at. And I'm going to, oop, that worked. And let's put that in there. Come on. Let's see if I get closer. There you go. Now we're going to put the B wave on the top. Okay, so that would suggest that we are, first of all, that we cannot go above this wave. So that's 42.15. We're within 3.25 points of that. Okay, we're very, very close, but it really should not go above it because this would be wave 1 and this would be wave 2, and this would be wave 1 of 3 and this would be wave 2 of 3, and wave 2 of 3 cannot go above where wave 1 started, and that's right there. If it does, it still could go up and come down and nosedive, but it's just not going to be a part of a 1, 2, and then a 1, 2. So that would leave me more into leaving that as the completion point. But remember, this is the alternate. The alternate would suggest it doesn't go above there, it turns and it starts to drive lower. And in fact, it likely reaches down here before it would rally again and then has one more dip before we would then expect this wave 5 to begin. That's the alternate. Now, conversely, I want to show what we would be looking at in terms of this, if this indeed did complete. And now we're going to measure out where we think wave 5 can go. And wave 5 would be related to wave 3. So we're going to turn around and we're going to now put Fibonacci extensions from there to there, all the way over to this. And you're going to see it's going to show some very sweet levels. There you go. No. Come on. See, touchy, touchy, touchy. Okay, so let me pull this down a little bit so that you could begin to see. Because remember, in this fifth wave, what are we looking for? We're looking for it to go up. It needs to make a new high. Well, what's the high so far? 4,238. So we need to get above that level to put in the new high. That's the minimum that this whole sequence, this 5-wave sequence for minor wave 5, needs to accomplish. Otherwise, it ends in a failure, and that would be a huge negative for the market, and a failure not to make a high at this cycle top. So where we're finishing, and the degrees that we're finishing here, I really do expect it to make a one blast higher and get itself up here. Now, first relationship, wave 5 would be equal to wave 3 at 0.618%. And that's 4,288.37. Well, that's above where we want it to be, and that's going to look. But guess what? We've had a lot of numbers coming up at 4,300, and we've had a lot of other analysts talking about those levels. So the next level that really where wave 5 would relate to wave 3 is that it's equal in length to wave 3, and that's going to be at 4,348.25. Now, here's the Elliott rule that goes along with that. Third waves are often the longest and the strongest out of waves 1, 3, and 5 within that 5-wave sequence. Now, what wave 3 cannot be is the shortest wave between 1, 3, and 5. So in this case, it is not. Wave 3 is bigger, and that is what we would kind of stand on. So wave 5 could most definitely get itself to this level. In fact, it most definitely, within the realm of reality, get itself up into this zone. If we had the push. Now, don't forget, there's got to be impetus. There's got to be something that's going to get people excited to jump and to act. And I don't know what that is going to be. We have so many things swirling around. Who knows what it's going to be? A continued opening of the cities and the states in the US? Maybe. You're reading now that Apple is asking employees to begin to return to Silicon Valley, to the big saucer home office that they have down there. That would revive so much of the local economy there. So there's a lot of positive that'll filter down. Now, whether that gets put into the market right away, I don't think so. But in any case, something's got to power this higher, and it needs to break to new highs. Those highs start right in here. 42.51 and on. Those are levels that we would expect the market to at least get to, break to new highs. I actually still feel strongly that the market should get to 4,300 before all is said and done. And then we're right into this zone from where that 618 on up. And that, I think, is realistic over the near term, over the coming soon to a market near you. So that's what I'm kind of talking about here. And it's going to be the type of a rally that you really want to participate, and don't worry about breaking to new highs. That's all to be expected. What you're going to want to do if you're day trading on your 1, your 2, and your 5-minute screen, you're going to pay attention to your moving averages. And you're going to trade accordingly. If the moving averages all line up on the 1, the 3, the 5, and then actually moves out, and maybe you got the 15, the 30, and the 60-minute, all in alignment to go up, the buyers will be there. Don't fight it. It's telling you. The market is telling you, we're coming in. Now, you jump on, but if you get in the way, we will take it, and we're keeping on going. So unless you have intent of selling to take profit, please don't fight it. It'll cost you a lot of money. In any case, that's what I'd be looking for. I'm looking for those types of moves. And so you can't get hung up on, oh, we're moving to new highs. Keep focused on your moving averages and what's happening and where the buyers are coming into. they're not going to care that they're breaking the new highs. They're going to want more. So we shouldn't care. In fact, you don't care if it goes up or down. You just want to catch the move and you want to be able to trade. So there will be plenty. If we get an upside move going, there will be plenty to trade on both sides. But my point is that your hold trades and your bigger money trades are going to come on the buy side if this is the move that we're going to begin. Your sell side trades are likely to be scalps because, of course, we ebb and flow always, but the bias will remain to the upside. And that's all I really have for today. We're going to wait and see because right now the market needs to really kind of keep going. And it's doing a good job now getting above there, which is going to open that door to allowing this corrective phase to be done. And that's good news because maybe we break out of this range for the time being and push ourselves up to new highs. That'll provide some decent trades, and that's what I'm looking for. Hope everybody has a really good trading day tomorrow. The next update will be on Thursday, June 3rd.